See, institutional traders, people in Wall Street, in the big financial markets, treat Bitcoin at the moment like a tech stock. Some people are predicting a 20 to 50% crash imminent for Bitcoin. Why is this? There are many reasons for this. The first one is obvious. The US debt ceiling is fast approaching, and as soon as the 1st of June, the United States of America might run out of money. If they don't raise the debt ceiling, it would be the first time in history that the United States would default on their loans or their credit obligations. And like many countries around the world, the United States spends a lot more than it makes, but the United States has had the unique opportunity to print their own money. So they have been kind of exempt from the punishment that is dealt out to other nations. But we are about to see, unless of course they raise the debt ceiling, which I believe that they will, a catastrophic crash in the financial system, the likes of which the world has never seen. But of course, I don't think the United States is going to actually let this happen, which is why I believe very strongly that they are going to raise the debt ceiling. There are also other things that are affecting this. There's a lot of fear in the market, right? It's just bad news all over the place. There's like corruption in Asia, what's going on in Ukraine and Russia. There's a lot of bad news happening. All the banks are crashing. But if you ask yourself, if banks are crashing and if people can no longer trust the dollar, then that's actually bullish for Bitcoin, correct? Because then you think people are going to seek alternatives to the establishment fiat system. And people who are savvy, multimillionaires, billionaires, will begin to move their money to a safer asset like Bitcoin. Yes, that's going to happen, and that's actually happening OTC at the moment, but not enough to make a kind of impact on Bitcoin price. What is making an impact on the BTC price though is the action of the traders. See, institutional traders, people in Wall Street, in the big financial markets, treat Bitcoin at the moment like a tech stock. Now, if you look at the Fear Greed Index, you can see that we're on the bottom end of greed. We've been in greed for the last month or so, which is why we've seen some rallies. We're about to dip into the neutral field, right? But this is for the whole stock market. So it includes things that are not tech stocks, includes things that are more secure or perceived to be more secure than tech stocks, less risk averse. But if you look at the Crypto Fear and Greed Index, you can see that we've dipped into neutral because the system treats Bitcoin as a tech stock, as a high risk asset. So they dump Bitcoin along with the other high risk stuff. So when the institutional people start to dump, as they have already started, we're going to see that go into the lower end of neutral and into fear. Hopefully we don't see extreme fear this time, but I think we're going to see even the stock market go into lower ends of neutral, perhaps even fear. If this happens, of course we can see a 20% dip in Bitcoin, and a 20% dip in Bitcoin. Some people are even predicting that we might see a crash below 25. Some have even proposed that it might go as low as 20. That's absolutely ridiculous. I think the effect of people running away from the dollar to Bitcoin is going to cause a rally that's going to negate the dumping, and we can even see it turn around to continue the rally. Now, if you zoom out a little bit on the Bitcoin chart, you can see that it's actually trending up. Of course, being such a volatile asset at the moment, and because of the macro conditions, we're going to see these large swings. People focus on these downward swings and forget about the big upswings that we've had in recent times. So I won't be panic selling anytime soon. I'm going to keep my diamond hands, and I'll see you in the next video.